Today seems like we could see some recovery from what transpired yesterday after the breach of 61 for the rupee and 5800 for the Nifty.
Yes, good morning. Well, yes, I think some of the data points suggest that we should be seeing a part recovery, I think, for the fall that we have seen yesterday, a sharp fall which we saw yesterday. I think the important point is that the liquidity which is remaining quite comfortable into the system, which could help RBI to consider a rate cut. And that should basically at least drive up the pre-rate cut kind of an expectation and the business, I think, accordingly into the marketplace. So I do believe that I think this could be, I think, an important trigger. The second most important trigger that I find probably is that the import bill, if it comes down, either by way of curbing the imports, I think, like what happened in case of gold, or maybe I think by way of natural factors like fall in the prices of crude oil. If that bill comes down, then it would probably have the positive impact again, I think, on depreciating rupee. It may probably halt. I'm not too sure how fast it can recover, but it may probably halt, and technically I think the rupee could possibly recover by 1 to 1.5 rupee against the dollar. That's possibility. So these few factors I think could possibly help market to bounce, and probably I think this bounce will have to be validated for the sustainability once I think the actions are taken based on what we basically talked about. Overall, I believe that I think it's probably becoming a little uncomfortable given the fall in the rupee and given the withdrawal of money from the FI side. So one will have to trade carefully. I would think that 5750, 5900 would be a tight range in which probably market would move around. And if it breaks, then probably I think 5650 on the downside could be seen. But otherwise, I think this 150 point range in which market would try and stabilize, at least for the time being.
Devendra, but the problem is that India-specific factors have not improved, and all the bad news seems to be coming together, whether it is rupee, crude, volatility or flows.
You are right, Nikunj. I think that's where I think we are a little uncomfortable, that I think India-specific factors are not definitely improving. So on a macroeconomic front, I think the situation is looking as precarious as I think we were talking about even earlier also, and have seen that. Okay, I think there's some kind of a silver lining in this kind of a scenario. I think one could give some good marks to monsoon. Probably I think it is progressing well, and it has given a good rains in the first month, and I think it is likely to give a good season of monsoon rains. The second most important factor, which is likely for the market particularly, the largest insurance company is basically wanting to deploy funds in this current financial year, which could possibly give the floor support to the market on the downside. So these are a couple of factors I think within the gloomy scenario where we would probably see market fall getting arrested, and I think we may see support coming into the market. So one will have to trade carefully, select good quality stocks at a lower levels when the market gives opportunity, and stay invested for your time to come, for at least I think flip them, even if I think you get a shorter term opportunity of 10-15%. So I think one will have to play accordingly as I see it.
Devin, what is the deal with RCOM? Do you think RCOM will continue to outperform Indian markets irrespective of the market environment? The stock is up 100% in last 1 year. It is a special situation stock, and given the news flow of late which has emerged, it could remain a special situation stock for another 2-3 quarters.
Yes, so right, Nikunj. Absolutely. I think I feel that they are basically taking corrective steps. The unlocking of the value from the real estate, though it will take 3 years before which I think it will pass on the benefits to the investors. But more importantly, unlocking of the value from the other infrastructure assets that they are holding, like a tower business. I believe that in this quarter they should be probably going ahead with the deal which they talked about for selling of the tower asset business. And that could possibly also I think reduce the debt component, which has come down to 32,000 crores to somewhere around 17,000-18,000 crores. It should easily save 950 to 1,000 crore worth of interest cost for the company going forward in the subsequent period of time. So yes, it's more of a corrective action that the company is taking. I'm not too sure about I think the telecom business in the core activity per se, because I believe that yes, there would be some amount of improvements in ARPU taking place, but whether they would be so meaningful and substantial to pop up the profit, I'm not sure on that aspect. But the fact that I think some of the financial transactions which I referred to, and probably even the flag telecom, also along with the rollout of the 4G telephony by Reliance and a subsequent amount of payment coming into them, these are all many positive operational financial measures that the company has taken. So yes, I think the company could remain little bit more favorable in the pricing front as far as the market activity goes.
Devin, but broadly, what is your assessment? Should genuine medium-term investors, should they buy now, or should they wait it out, and as the QE unwinds in the second half of this calendar year, they could get better entry points?
I'm not too sure whether the second half of the calendar year one should refer to, but I would think that this particular quarter is an important quarter. We are likely to see some amount of knee-jerk reaction to the Fed's action, particularly on the slowing down of the purchases of the bonds, and that could possibly mean that the market may react somewhere in the middle of September or so. It could react negatively on this aspect. To my mind, I think whatever the reaction happens, I think in this period, if one is prepared to invest at that point of time at the lower levels, I think one would get a phenomenal opportunity as I see it for the subsequent portion of the year, as well as I think coming 2 to 3 years. I certainly believe that the withdrawal of QE3 in gradual basis, I think may create some amount of pains in the immediate future, but subsequently I think the markets across the world would stabilize big time, because believe that other asset classes where the growth is high, particularly the crude oil asset class and all, may I think come down during this particular process, and that would favor the equity markets in general. That's where I think I'm hoping my hope on this subject, and I feel that I think in the second half of the financial year and subsequent portions of the next financial years, I think could possibly see a good market and the momentum. So value buying should be advised, I think, somewhere in this quarter during the fall in the markets.
Devin, the OMC basket is the one which is really reeling under pressure on account of the weakness in the currency right now. Is it time to sell into these names, or would you use this opportunity to accumulate some of the stocks?
No, certainly not wanting to accumulate, I think, any of the PSU companies, particularly because the high level of politics, I think they continue to play with. I think this is not something which is giving comfort to me, at least I think on the investing side. Yes, I think any stable government, I think, giving a commitment that they are not going to play around with the policy regime and they are going to allow this company to work on their own merits, that would be the right time to buy into some of the PSU companies. I would rather think that within the PSU OMC space, I think if you want to buy, BPCL could be, I think, a first choice. I think more because of the upstream portfolio that they have now, and that could possibly give better amount of performance subsequently. But otherwise, I think ONGCs and Oil India within the upstream space, I think would be much better vis-a-vis the OMC if one must buy PSU. I think then in that case, ONGC Oil India would be a better choice according to me.
Devin, the slowdown in China seems to be taking its toll on Tata Motors by way of the sales numbers that JLR has been posting. Is it time to short Tata Motors?
No, not really. I think I wouldn't short Tata Motors. Yes, I think some amount of negative news flows are affecting the sentiments, but let's also understand vis-a-vis the loss of China, I think you have North America, which is improving as an economy. So I think larger amount of business is also being talked about from that particular geography. That's the first part. The second part is that the kind of new model launches, which is I think happening in this particular case. I would think that I think larger amount of launches which takes place in a subsequent period of time from the JLR portfolio would certainly drive up the volume as far as the company is concerned. In fact, I think the F-type success story is going to be largely reflected into the bottom line of the company, where the company is expected to produce around 12 to 12.5% kind of a profit straight from the F-type range of vehicles that they have basically launched into the global markets. So to my mind, I think we believe that any fall in Tata Motors price could possibly become a buy opportunity and not otherwise. So certainly I think it is a case for investment. As Nikunj was earlier asking for, I think this is a company where one could probably buy at lower levels during the fall into the market.
Okay, let's look at HDFC Bank. It is the most haloed stock of Indian markets. Everyone is of the view that this company or this bank will continue to grow irrespective of the environment. So far, they have also demonstrated that. They've demonstrated a CAGR growth of about 30% plus for about 25-26 quarters in a row. But if you look at this year's price action, HDFC Bank has done precious little. This year, on an aggregate basis, flows have been strong, but HDFC Bank is down by about 4%. Devin, do you think HDFC Bank is losing its halo status? Flows are strong. If I look at the aggregate flows, markets are still buying into quality stocks, but this is one quality stock which is down on a YTD basis.
I'm not totally surprised, Nikunj, I think, for the kind of a behavior of the market at this point of time. Though they have been by and large consistent with their performance as far as the working on a quarterly basis is concerned, even on the yearly basis is concerned. I would think that the market possibly is not interested in buying any company which is valuing reach, and HDFC Bank falls in that category. So certainly that's why I think there is a lack of preference. Yet I think at the same time the stock is not going down as badly and not misbehaving either. So from a perspective of I think buying this stock, certainly I think you will have to use the weak market sentiments at some point of time. If one gets, I think one can buy into this kind of a company. I would also believe that I think in the banking space in general, particularly private sector banks, I think may probably show a little slower growth on the pricing front in the stock market, more because of the valuations at which they are quoting. Unless economies improve significantly and the GDP rate starts jumping up, I think more or less I think the private sector banks, though they may not go down badly, but at the same time finding a good amount of appreciation would be a little hard to come. So one will have to buy these stocks in a falling market, in a nervous sentiment, to get the headroom for an upside eventually.
Devin, what about IT? A good sign yesterday considering Infy is stepping into its earnings week with a green tick.
Well, again, I think the rupee depreciation front this quarter, many of the IT companies as we gather are likely to have better bottom line talked about. I think little better compared to most analyst expectations going to be. So from a perspective of I think looking at quarterly results, certainly I think this quarter results should be I think a cheerful result for many of the IT companies as I see it. However, I think the long-term opportunity into the IT will have to be found out into selective companies and not across the band in general for every other company. Maybe I think one will have to look at the kind of inorganic growth opportunity which some of these companies may want to resort to build up a growth. Particularly given the US sanction on the visa, etc., I think this is going to create some serious amount of challenges on the operational side, and that's where I think they may have to seriously consider inorganic growth, and that's where the news flow driven opportunity would be available in some of the IT companies. I would rather prefer to buy into some of the mid-sized IT companies like KPIT Cummins, where the growth rate is looking more certain, and I think they are not getting negatively impacted because of US sanctions, etc. So from that point of view, I think these kind of companies may be a little more better compared to the front line, which are probably showing less room for the upside.